Certainly the market reacting positively to those numbers so far, close to 1% of a gain filtering through there, and the fundamentals around that copper price has got to be keeping you happy right now.
Yeah, we certainly are a lot happier. I think with the repositioning of Metorex as a copper and cobalt player, I think we made the right decision some 2 years back.
Looking at that copper price zone, we had it recently going above $10,000 a ton. You've hedged some of your production. I think those hedges continue through to this year. How have they hindered perhaps the full benefits you could have seen from those metal prices?
I don't see it as a hindrance. We took them out at a time when things were quite dire in the company, and we had to position the company should there be a downturn in the copper price. So we were quite defensive in taking out those hedges. Suffice it to say that we achieve around about 90% of the spot copper price at present. So our hedges are set up in such a way that we do participate in some of the upside. And ultimately, 63% of the company is unhedged. And we will protect ourselves for the time being while we have debt. But the hedges will run out in just over a year's time.
Mm-hmm. Looking at your position moving forward then, I mean, looking at growth and plans moving forward, what kind of capex spend are we looking at to take advantage of rising demand that's out there and increasing production levels as well?
I think importantly for us, and we're starting to give the market an indication of what the new Consender mine could look like. We probably would approve this project at the Metorex board level nearer to the end of April. The capital spend on that project is anywhere between $130 and $150 million. We are looking to do that out of cash flows, but at the same time we are going to secure a facility for $66 million at the back end of our debt profile that we currently have.
Derek, your view on those numbers? I think you've had a glance at them already.
Yes, no, look, I'm quite bullish on Metorex, and yeah, I think it's a commendable result. And yeah, I think it's very nicely positioned to go into 2011. Obviously, as you mentioned, we've got very strong commodity and particularly copper prices at this point in time. And I think it's been a very well managed company if you look at it from the outset in terms of the recent rights issue that they just did, you know, decreasing a lot of their debt that was on their balance sheet and then further stipulating in their results that, you know, reducing that debt further. So, you know, it's in a position now where you can see, you know, potential for some nice capex spend to take advantage of high commodity prices, particularly copper prices, as well as further reducing that debt. So I think a lot of shareholders that have been in the share took advantage of the rights issue are very happy shareholders at this point in time. So I'm still quite bullish on it, and I still remain very positive on it going forward through 2011. And yeah, hopefully you can see some good things unfold there.
Of course, you've got that demand dynamic really supportive. You've got the copper price supportive as well. We're seeing this ramp up in capex as well. And you know, you're certainly in a position where you can take advantage of the opportunity moving forward. A challenge that has persisted is power interruptions, specifically in the DRC. What's the status of things there, and just how much of a hindrance is it in terms of, you know, harnessing your ability to cater to demand?
And I think one has to step back firstly. The supply of utilities in all the developing world is always going to be a challenge, whether it's water or power. Suffice it to say is that we have found that there's been very little power interruptions over the last while. They've been short, but they were able to deal with them. As an example, in Zambia, we've now put in an additional generating capacity where we can operate the mine without grid power. Mm-hmm. And those are some of the initiatives that one needs to put into place. If there is more development in the DRC into the longer term, it is going to stress the power supply in the area. But we've secured our offtake, we've put in our lines, we've put in our substations, and we look, even if you look at the new Consender mine, we believe we've got enough power to run those operations. And we just have to make sure that whatever power we use, often the power is what we call dirty, we can make sure that it doesn't interrupt, and we engineer that risk out of our business.
Here's something I'd like both of your views on. I'll start with you, Terence. Obviously we're facing some supply constraints for metals like copper this year, but lots of people are ramping up production. So looking 2 to 3 years out, how do you see supply-demand factors playing out at that point, particularly with additional capacity or additional metal in the market? Could we see a big pullback in prices?
I'm not so sure about that. If you look at a Metorex, for example, and yes, we're a small player, But you then also look at announcements coming out of the majors where they drop off 200,000 tons of copper per annum. That would need 4 new Metorexes to in actual fact supplement that. So I still believe that supply is stressed. If you look at the grades into the big Chilean mines and you look at the grades on the, let's call it the top producers of the world, the top 12 mines, grades and volumes are coming off, costs are going up on those mines. So I still believe that supply is stressed. And if you take demand from current levels and you grow that demand, you have to ask, well, where is the copper going to come from?
Well, Dirk, how about your view? Because looking 2 to 3 years out, and I know you're bullish on commodities in the short term anyway, but 2 to 3 years, do you still see that demand growing like it is at the moment? And do you think we're going to have oversupply or undersupply at that point?
Well, if you just look at it from the outset and you look through the financial crisis when a lot of these commodity stocks came off and all our resource plays came down, a lot of it was driven by supply, from the supply side, where furnaces had to shut down, they had to limit their outtake, where growth globally literally came to a standstill. Now it goes back to what we were talking about earlier and looking at the growth prospects coming out of the east. And sure, there might be some revisions that come down in terms of what they're guiding at the moment, but at the end of the day, the growth is still going to persist there. So, you know, you look at population growth, where it's going, what they need to do, how much copper they need to supply to increase the population that they're having at the moment. And 2 to 3 years out, I still think you could see a quick and a sharp spike over the next year or year to 18 months, and then possibly a little bit of a plateau out. But you're seeing a definite shift from furnaces running at full capacity at this point in time and purely driven by demand. The demand is out there. So, you know, there could be a little bit of stockpiling that's taking place, but demand is persisting, and I believe that demand is going to persist and increase for the first 18 months and then possibly plateau out to take you to that 3-year point.
And Terence, let's look at what cost, because I mean we've got your on-mine cost per ton milled, well controlled, remaining flat at $59 per ton, and obviously assisted by increased volumes mined and milled as well. What's your outlook on that front, on the cost front?
Yeah, those are the figures for our Chibaluma mine. If you look at Ruwashi, it's closer to $100 a ton. The input costs are always going to be a challenge. And if one looks at what's happening with diesel prices as an example, we're not as energy intensive as some of, let's call it, the major mines. So it doesn't impact us as much, but it is inflationary. I mean, the other cost driver is always going to be wages, which is probably 25% of our cost base. And there's always expectations there, and we always have to do what's best for our employees as well. But overall, we don't expect reagents to rocket up too much. And you know, what we must do is control our costs, and we must make sure that we deliver our volumes, value, and quality.
Well, something you can't control is the rand. What sort of challenge does the rand pose to you? And perhaps give us a view on how you see the copper price moving from here, the rand copper price.
Well. We actually don't need to talk too much about the rand. We're going to convert everything into dollars now. We've basically sold off everything in South Africa. So we're now a US dollar denominated company. Are
you going to report in dollars as well?
We announced today we're going to
I guess the rand is stripped out of the equation.
Yes.
Well, dealing with that challenge, what have you made of that move, converting? Because as we know, for a lot of the miners in South Africa, we were discussing earlier, the rand is one of those big challenges right now.
Yeah, well, if you just look at it over the last 6 months and you say, well, what's really driven our rand strength? And if you just look at, for example, the foreign inflows, the appetite for our bonds, and just, you know, more specifically, you look at the appetite for our retailers, there's been a lot of foreign investment that's taken place, not just in South Africa, but in emerging markets as a whole. So, you know, fundamentally sitting very full at the moment, you got to ask yourself, well, maybe there is some of that value unlock in the developed world. So, you know, moving into a dollarized type play is probably quite a clever move at this point in the cycle, given the fact that if you just look at the foreign net outflows a week ago, you know, there was definitely some outflows going out of our market, and you could see that taking place in the bond market as well. So, you know, I still think that at this point in the cycle, you've got to say, you've got to start hedging yourself against the potential of a weakening rand. And, you know, I think a lot of that value unlock is going to come in the developed world, and, you know, in the US, in the Eurozone, in the UK market, you are going to see some good fundamental buys that take place there. And then you've got the push of the currency that works in your favor as well.
Well, Terence, apart from the move to reporting in dollars, you've also changed your year end, so you're reporting for the 6 months to December as well as the 18 months to December. Okay. So 2011, a fresh slate, a fresh year. What are the prospects for this year for the group?
I think the prospects are good. If we talking about the commodity prices, I think that's resilient. If you look at our costs, I think they're very competitive, and on the back of us, it's rectifying the transformer issues that we've had at Ruwashi. I think we should be in a very good position.